Welcome to the Swing Trading Workshop. I am with Joe Rabil. I'm Bruce Fraser, and we are going to do a workshop, a case study method workshop using swing trading techniques, the very best of the great work that Joe Rabil does with the point and figure analysis that I often do in my power charting episodes. And so we are very excited to present this, and we hope to do more of them in the future. And so with that, let's get started.
So Bruce, before we get going, I thought it would be worthwhile just to talk about a few things. Number one, for people that have watched my shows, they might wonder why I would have an interest in talking about point and figure charts when I don't discuss point and figure charts in my show at all. And I want to make sure people realize that the first book I ever wrote was for institutions that I was working with back in the 90s. And it was a point and figure manual for them who had no idea how to use point and figure charts. And when I started in the business, I was at the close of every day, I was doing point and figure charts by hand. So that's one part. And the other part is the fact that early on for me, the full Wyckoff course was a part of my early schooling. And even though I don't talk about that in what I do now, in other words, I don't necessarily use the same phrases that come with the course. I'm using the basic tenets that are so important. So this really hit home with me when you and I were talking at ChartCon. We were having a cup of coffee, and I really felt like this was a great thing for people to understand. And I do want to make sure people get that swing trading for us and the way we define it means that you have a target in mind. It could be a long pull swing trade. It doesn't have to be something that you're only in for a couple of days. It could be something that you're in for months, but you have an end in mind. You're not going to just trail a stop until you get stopped out. That's a trend trade. Swing trading for us and how we're defining it in this workshop is we're looking to get in and looking to get out. We're trying to define the risk and trying to define the reward. So with that, I think we can get going, unless you have anything you want to add, Bruce.
Just that I think that first of all, we discovered at ChartCon that we are kindred spirits, because in my early days, I was doing big stacks of point and figure charts by hand. And we just started talking about our early careers and realized that we had a lot in common, and we really want to share this with you in this case study method approach to evaluating stocks. And I really think the combination of Joe's great work and the great work of point and figure really creates a very strong whole for the complete trader. And with that, we're going to pause and we'll be right back.
So I wanted to start with this slide, which Bruce would be, and all of the people that have watched Bruce for years or read his blogs would have a real good feel for. And I wanted to, because the way I look at what I do is, again, I like to take these basic tenets from Wyckoff, but I add in my own work, and you can see the ADX line at the bottom. So I kind of feel like if Wyckoff were around and when computers were, around, I think that he would appreciate what I'm done here. I'm trying to take the basic tenets and take them into, the future in a way where we have advantage of the computer. And that's really what ADX is. ADX could only be created. You can't do this by hand. It's too much. There's too much going on with respect to the calculation. But if we look at this really briefly, we have the accumulation stage, and then we have the markup phase where we're trending to the upside, and then we have a topping phase, and then we have the declining phase or markdown phase. The ADX can really help us define that. I'm going to go into that when we go into the case study. But we're looking for periods where the ADX is above this line, this horizontal line, which is 25, at least on the peaks. It makes strong enough move to tell us that the trend is strong. Now, for the most part, when you're swing trading short to intermediate term trends, we want to stick with this area here, the markup phase. And when you're looking at the beginning phase of possibly like a campaign where you're looking for a bigger move, you're going to really be at the early stages of the markup, not necessarily later on. So I just wanted to point this out. I think the combination of using ADX with this whole mentality, or the different phases of the Wyckoff approach, I think they work together really, really well. Okay, so the case study we picked was WWE, World Wrestling Entertainment. And it's kind of funny because when Bruce and I started talking about this, we wanted to identify, kind of two different phases. One was the early part of a campaign, potentially, a pretty substantial up move. And then also looking at like just point to point swing trades where you look to play a pullback and then play for a targeted move to the upside. And the WWE really gave us both. I mean, this stock has been an amazing performer. You can see this is the relative performance line, relative strength line. And basically for 2022, it's been going straight up. But there was a lot of work that went in advance, and what Wyckoff people would say, there was a cause that created this move. And so I just want to show real quick how I came to look at this, why it's been mentioned in some of my research as an idea that looked pretty attractive. So we have this declining phase to the downside on the monthly chart that ended in early 2022. And then we started to try and form some kind of a bottom. But really what happened is it pushed up. And the key thing for me is this 18-month line. And it helps to find the trend in every time frame. And once we pushed up through that line, we needed to form a base. And instead of basing below the line or at the line, it got above it. And then it basically found support at this line. But the one thing I wanted to point out is that it had this little up thrust pattern. It kind of failed, but it came down and found support at the 18-month here, and then rallied up again and came down and found support at this line again. But now we've got a rising line and we're starting to respect it. Also note, on a MACD basis, we were well below the zero line. And at this point, now that we're resurfacing back above the zero line and showing a little bit of strength. And then here we had strong ADX pattern to the upside, a big correction to the downside with sellers in command on this decline. That's where the ADX is rising, but it's based on the red, which is based on the sellers. Okay. And then we start this process of starting to improve in price, and green is starting to lift up a little bit in conjunction with the MACD. So we've got some signs of improvement, but this is really where it starts to catch my eye, because we're catching hold of this 18-month. Now, if we go to the weekly chart, this area here is this area right here. And we're channeling sideways. And then we finally start to show respect for an 18-week line that's rising. We start to show improvement in a MACD basis where it's starting to lift off the zero line. And then we start to see the ADX moving up based on the buyers again. So I've got this combination of two timeframes side by side combined with the momentum that's telling me there's significant improvement going on. And just to look at it from a basic standpoint, I'm sitting above a rising 18-month, and now I'm sitting above a rising 18-week. And when I have that combination supported by momentum, then I'm very, very interested in looking at how much upside I potentially have. So that's really the goal here. Now, in terms of entries, we could be drawing a downtrend line on this wedging pattern. We could actually look to be a little bit more aggressive if we want to play this pullback on this area, or we could just look to play the first pullback at the rising 18-week. So there's a couple different options there depending on how aggressive you want to be and how much you like the overall pattern. Let's switch over to Bruce and show how in this situation he gives us the targets based on the point and figure.
And I want to just point out that these areas that you just highlighted, we will be looking at them on a point and figure basis here in just a second. And keep in mind Joe's comments about the setup, the structure on the vertical bar chart, and also how we will combine point and figure with that analysis. So it's like spot on, Joe. And here we go. We'll be right back. Well, Joe's presentation, we recorded this on Halloween, and I have to say Joe's presentation gave me goosebumps. So it's really, it was so good. Here we're looking at a 3-box reversal method, which gives us bigger time frames. This is the time frame that Joe was discussing This is the 2020 accumulation area. And then he was also talking about what I would call a reaccumulation area here on this chart. And what we want to do is we want to create structure and be able to see if we can organize the chart in such a way that we can see these accumulation and reaccumulation areas for the purposes of horizontal point figure counting. You can draw trend lines. Here's the downtrend that Joe was talking about. We had a throw under of this downtrend, drawing the supply line over the market on these 2 points right here. And then we draw the parallel on the intervening low. Look at this big decline here. And we have 2 periods of oversold under the channel, which can't hold, comes back into the channel, hugs it along this area. And this is our first accumulation structure. So now, for those of you that are Wyckoffians, I put the labeling in. Not going to talk much about it here, but you can read my blogs for more on what these terms mean. This is the important one, selling climax, and then the last point of support, which is the last place that it tested before the uptrend began. So here we want to take this count, which is this yellow shaded area. That's our conservative campaign count, we would say. And then the next area is to take across the entire accumulation structure, which we go from the backup. You'll note that Joe talked about these signs of strength here. Here's a big sign of strength and a pullback. Old resistance becomes new support. We count from here across, do the whole area. And then we have a third area, which Joe discussed, which is this reaccumulation count. Now, I'm pretty conservative in my counting. And so you'll see that I didn't count all the way across. Not that that couldn't be done, but I think this is the appropriate count because this pullback gave us this more important rise here. So from the low to the high, this shows this is the place where really good demand came in and really shot the WWE upward before it pulled back and continued to build a cause. So all of this in this area we're assuming is good demand building a count. And I want to point out that Joe's ADX tools are really a way to be able to describe what happens in the late stages of accumulation, which is the concept of absorption, because you can see the volatility coming out of this structure as we come to the end of it. And it's this is what we would call a hinge or a pivot. And here you can see the same kind of thing going on. In the ADX, that would be the volatility coming out just at the point at which the uptrend is beginning. So it's a very cool visual tool is the ADX. So anyway, here is the counts. Well, so let's take a look at where these would count to. And now also we have an uptrend forming, and we'll come back to that later. But these accumulation, reaccumulation, and here are the counts. So this is the count. So 17 columns across times 3, because it's 3-box reversal, times a scale of 1. And this count, we add that number to the low and to the LPS, we get a count 80 to 86. I want you to remember that number. And also you'll see that we're getting very close to it right now. We have a bit of a buying climax surge taking place at this time. The larger count goes all the way up to 104 to 122. So that larger campaign count is very interesting. And then finally, we have a reaccumulation count that goes 110, 118. And again, same idea, 21 columns times 3 times scale of 1 and add it to the low and to the count line. And note that these two counts confirm each other. That's like added confirmation that this is a really good potential upside count that we have in store for us. And so here we are. And with that, I'm going to go ahead and stop at this point and turn it back over to Joe, and then we'll come back to the swing trading counts.
Okay, so love what Bruce is doing because it's all based on price and price volatility, and it's just a great starting point. And as I tell everyone that watches any of my shows and subscribers, you always want to start with price and then use the indicators to support price as opposed to the other way around. You don't want to have the indicator driving. You want to have the price driving and then use the indicators to support your thesis based on what you're seeing in price. So we're coming back to my charts here and this turn that developed here, and how the first entry, last first entry would have been the first time you pulled back to a rising 18-week and a rising 18-month with supporting evidence on an ADX basis. Now, one thing I want to point out is this big move here, this strong move to the upside, is what Bruce was referring to as a change in trend. So this big move was kind of the precursor to the big switch, but it needed time to go through a longer accumulation phase and turn around this 18-month line, which was still declining at the time it crossed. So we have that. Now, once this gets going, we can play every pullback along the way. And let me just show you the ways that I would do that. And this goes back to one. Now we're in. So once we get to this point here, where we're getting back above this level, ADX is confirming the new move. MACD is confirming this move. We can now focus in on this channel, this upward moving, this markup phase essentially, and look to play pullbacks. And I like to do that as long as the 18 and the 40 are rising at about the same rate, which is what they're doing. I want to play every pullback, especially if MACD and ADX are confirming the moves, and ADX just needs to make a move up to 30 or so, 25 to 30. And if it does that, it's confirming, and we want to play each pullback. Now, the way that I play the pullbacks, so I'm just going to focus in on these last two, and we're going to pull up the daily chart. And what I'm doing is I'm actually looking for the opposite pattern to develop. So during the decline, I want to see low ADX. During this decline, we have low ADX. That tells us that the sellers are weak. So this is telling us that the buyers are strong because it was on the way up, right? These two moves confirmed by ADX to the upside. And then we go through a consolidation or a correction phase or a pullback. And it shows that the sellers are weak. So I want low ADX during the pullback phase. And both of these cases are great opportunities. Now, the entry is a little bit different each time based on how strong or how the MACD looks. But just suffice it to say that if we wait for a pullback to the 18 here, which is now holding, we've got a pretty good opportunity here with MACD crossing back up. And then in this case, we come down, we go into the zone and pull back and test this low. And MACD does the same thing. So I like, if I get a big overrun in MACD where it overruns the zero line, I look for the second cross of the signal line, which happens here as we're crossing back above. So, you know, the techniques for triggers, it can get a little bit complicated, but suffice it to say, we're trying to identify strong move to the upside and low ADX on a pullback. And if you get that, then we're looking for triggers that could be based on trend line breaks or just holding the 18. So let's go ahead and look at the targets based on Bruce's work using the point and figure.
I just want to make the point that Joe and I decided on WWE to do this case study on, but beyond that, we both did our work independently of each other. And I think that what you're going to discover is that our work is remarkably compatible, even though we're looking at different charting tools and so on, because these are best practices, and best practices of good trading are going to show through in a number of various different methodologies. And so here we're looking at World Wrestling again on a one box chart. So this is 1 point reversal, 1 point scaling, because it's a inside of $100. So everything inside of 100 down to 15 is 1 point. And so here is our uptrend channel, the area that Joe just evaluated. And you can see that we can draw a trend line on these two initial points here and here, gives us the demand, we call the demand line. We draw an overarching parallel above, which gives us overbought. Look how beautifully this worked in these areas. And then we're going to start to look for these causal structures. So we see a very sharp decline this decline is stopped here, has a rally, a more important rally that sets up a range-bound condition. And this range-bound condition gives us the opportunity to take a count. We count from the first backup, we would call it, the final backup in the structure over to this little selling climax, and we get an upward count. We take the count line across here, 21 columns times 1 times 1 point scale, and it gives us a count up here to 68 to 72. We miss it by 1 box here, and it goes up into this area. So that's very interesting. So now we have a second structure. We count from the backup over to this little sharp pullback. We'll note this pullback and this rally adjacent to each other give us sort of the range of the subsequent structure. And so we count across 19 columns, and then we want to take from the count line this low here, and also from the low we would count 19 times 1 times 1, and we count from the low and from the count line, and this flags a count that takes us up to 74 to 77, and it targets this zone right here, which also note that it's above the top of the trend channel. So we have a count that confirms an overbought condition on this climactic surge in a test above this area, and this is going to give us a more important pullback. We also have a small accumulation here, 11 columns, and so we count from the last pullback over to the initial low, very sharp decline, and a rally sets up the range of the accumulation structure, which goes down to the bottom of this demand line. And we want to take the count line, 11 columns, add that to the low and to the count line. It gives us a count up here to 76 to 70. And this takes us right into this zone here. And note that these are confirming counts. And so this adds validity to this initial count. And also note that after this count is fulfilled, we have a very sharp decline back to the bottom, to the demand line, to the bottom of the uptrending channel. And then finally, we have this third count here, which very sharp decline, and then a rally. This sets up the range. We have one last pullback before it ascends out of this area, 13 columns across. Note that these touches are on the demand line, which all these areas can be good areas for initiating or adding to positions on a swing trading basis. And keep in mind that point and figure gives us a tool for being able to sell on strength, which is a very important point that Joe had made earlier, that we are looking to identify these swing moves and then be able to sell these in a appropriate position. So now let's take this last count, 13 across, gives us a count up to 78 to 81. And keep in mind that that initial count that we had on the weekly chart took us just up to 80 to 84, I think. So that takes us into this final count area, which is also a throwover of this channel. And this is an area where I believe we may be able to have a more important cause building or reaccumulation that could then build a cause potentially for that move up to the higher price objectives. And so with that, that is looking at the one box reversal method. And Joe and I will be right back with some concluding thoughts. Joe, thank you so much for collaborating with me and putting on this great swing trading workshop. It was as much or more than I could have ever hoped for. And so your concluding thoughts.
Well, one of the things that I think is so important that we discussed at ChartCon, and the reason why this collaboration came about really is because the market has shifted somewhat. We just went through a 12-year uptrend that's broken. Is it possible that we could just start another uptrend? I mean, it's possible, but I think you and I are kind of the agreement that this could be a much more difficult environment to just put on trades and hope for the best, or hold them for a longer period. And so swing trading, again, even if it's based on weeks rather than days, can be a really valuable tool right now something that you want to learn about. And so that was part of the reason why we wanted to do this, and maybe continue to do this depending on if there's an interest in that. And so that's kind of where I wanted to be with it. So my show, Stock Talk, I go into my side, which is, moving averages, momentum, that kind of thing, looking to use multiple time frames. And you guys, if you want any of my subscribers that don't know Bruce's stuff, go to Power Charting, watch his show. Really good stuff in terms of incorporating these types of targets.
Thank you so much. And really, definitely that there's a commonality between the work that we do. And I really enjoy doing this, and I hope that we can do a number of them in the future. And so with that, Joe, thank you so much for being here.
Thanks,
and
Bruce.
for doing this with me, and look forward to doing it again.
Hey, Grayson Rose here with Stockcharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.